Hello, and welcome to Three Slides in 3 Minutes. So far in 2025, the market's been like a fast car with a nervous driver. Quick moves, but always checking the mirrors. Tech stocks have led the way again, especially anything tied to AI. The Fed hit pause on raising interest rates, and then they began to go down, which gave investors some breathing room. Bonds quietly came back into the picture, and regular people, retail investors, are still showing up and making an impact. But here's the thing: when you zoom out and look at the chart, one thing becomes clear: staying invested through the ups and downs actually works. Early in the year, things dropped fast, then they recovered, then built momentum. That's how real investing feels. It's not perfect and it's never smooth, but by November, most models were positive and some beat the overall market. The takeaway: you don't have to guess the perfect day to buy or sell. What you need is a plan you trust and the discipline to stick with it. And that's how you grow money over time. More families in the US are renting homes instead of buying right now. Why? Because it's simply cheaper. A company called Pretium ran the numbers and found that for buying a home to make sense again, mortgage rates would need to drop from about 6.2% to 3.7%. Now, that's quite a shift. Until then, renting is the better deal for a lot of people. Imagine you're comparing two paths. One leads to a monthly payment that's manageable, the other costs a lot more just to say you own the place. That extra cost doesn't always make financial sense. What I tell people, whether students or business owners, is to look at the math first. Emotions shouldn't drive the decision. The goal is to build stability, not just chase what sounds good. So, who's doing all the buying and selling in the US stock market? Turns out regular people, retail investors, actually drive most of the volume. On the institutional side, it's split. About half are using computer models, quants, and the other half are doing traditional research, picking stocks one by one. You've also got half the volume happening really fast, milliseconds, and the other half more longer term. And what does that mean? Retail investors are in charge of the tempo. Quants are off running their algorithms, and old school investors, the Warren Buffett types, are kind of in the minority. That's not surprising in a market that feels like it's booming in certain sectors, but it's a reminder. If you're investing right now, know who's in the room with you and don't chase what you don't understand. Thank you. And if you have any questions, please reach out.